This is our Forex blog for September 12th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. Trends do not go one direction forever, so always be aware that even though, as you can see here, the dollar trend, daily trend, weekly trend, monthly trend, blood red, it's just, when the currency's up or down too much across the board, you can have counter trend trades. So it's really in your advantage to trade every day, and when you see a currency go pretty much straight up or down versus almost every other pair for 3 to 5 days, just be on the lookout and be a little bit more cautious when dipping your feet into an already overextended trend. So anyway, but most days we want to buy the strongest ones versus the weak and sell the weakest versus the strong, and it's always easiest when all the time frames line up. This is our sortable currency meter, and if you sort this, you can see the Euro, Pound, Swiss, and New Zealand have the strongest real-time uptrends right now. The CAD, Australian yen, and dollar are the weakest. So, and you can also see that the euro is pretty much strong on all time frames for the most part today. You would have wanted to trade this against whatever was, weak at the time. Earlier from midnight until about 2:30. Let's scroll some of these back. The pound, it looks like the yen was the weakest during that time. So from midnight to 2:30, you want to look for buys in the euro yen. So as you can see here, midnight to about 3 o'clock's right here, so that's pretty much the end of the move. Really, the only trade I see on this coming up to today is this little flag pattern right here. Typically, pattern type breakouts tend to be profitable, and you always want to draw your fibs from the previous swing. And it gives you an idea of where your profit target is. Somewhere between the first and second fib target, you can see it just went 3 pips above, or 2 pips above the 1.32 fib target, and it ran out of steam. It was also near upper containment band. So, that's the first trade. The market pulled back, and look where it found support. Right at the hourly moving average, right at yesterday's value area high. This was the point of control of yesterday, which is the most actively traded price of the previous day. This is where it spent 68% of its activity, between the upper value area and the lower value area. And these act as amazing support resistance. You can see it acted as support, went up, that was a pretty decent buy. And once it, failed going up, it broke above the previous day's high here, had a false breakout, failed again. You had that absolutely huge and very quick drop. Look where it found support. Right at the lower containment band, right at the value area low. There was a lot of weakness here, so I never really try to buy lows like that. However, if it's at a major support area, if it's moved statistically too far, the upper and lower bands are very high probability. If you see it go sideways at a particular support area for at least 3 to 5 bars minimum, you can see it's a nice little flag pattern or wedge pattern breakout. So if you took that trade, I would have looked at this as the first profit target, this is the second, this is the fourth, this is the fifth, just kept going. And the first bar that closes down, you put your stop one pip underneath there, so you already got out of that at 13. Most counter trend trades are not going to give you 30 pips. You're going to probably make anywhere from 8 to 15 the vast majority of the time. So basically, once the market went up like that, it's very strong. Although it did go up a lot, statistically the euro was not that strong at the time and the yen was not that weak. So it's pretty high probability that this thing's going to go down, but it is above a support area. Once it breaks down right here, you might go short. You might also try selling it right here. And, the longer term trend's up, so you always got to be aware of that. Let's go back to the currency meter. I initially just wanted to show this, and this is the easiest way for new traders to trade. The CAD was strong today on all time frames. That's a good one to be trading against the weakest one, which was the yen. We want to look for CAD yen buys. This is, again, one of the easier ways of trading. Here's the point of control of the previous day. And just like with the euro, you have a nice little flag pattern breakout starting the day off. But unlike the euro, this one really didn't go that far. Notice the value area high. Major resistance area, and of course, it ran into some trouble here. If you're in a trade and it goes to, one of these value area lines or any other support resistance or the upper containment bands, and it just kind of goes sideways. You always want to put your stop initially underneath, the wedge pattern low. I'll just take this line here and use it as a stop. Initially would be underneath here. And once it's kind of going sideways there, I always yank my stop up underneath those bars low. And when it came down, this would have been a very, very tiny profit. It fell with a decent amount of weakness, came back up to the point of control, very high probability place to sell, and of course it did go down. However, it found support at one of these Fibonacci areas, and this is the value area high of the previous week. This is last week spent 68% of its whole trading activity from here to the value area low, which might be down. You can't see it on the chart, but it's probably 79, 78, 50, somewhere between there. So it found support here. When it breaks out again, you want to go long. And of course, look where it went, right to the point of control, found resistance, you get out of your trade there. And if you flip that and went short, it's not a bad idea, but it is above the hourly, so it's a little bit lower odds trade. And, if you see a double top at resistance area like this, not a bad trade. Pretty choppy price action. It was higher probability earlier in the day when the CAD was strong and the yen was weak. You can see at 6 o'clock here, the CAD all of a sudden became super weak. It was one of the statistically weakest ones. And at 6 o'clock, let me move this chart up. Sorry, it's down here. Here's 6 o'clock. You can see at that point it became weak. I wouldn't have sold right here just because you have the value area of the previous week, upper value area. You have a Fibonacci profit or retracement level here that I do each night, and the previous day's lows right here. So if you sell the 79.95 area, your likely maximum profit's at 83. Are you going to risk 10 pips to make 12? It doesn't make sense. Here's some other ways that you can trade. Let's just bring up, like, say, the euro dollar. Here's our colored bars. Oops, let me put that back on here. If you don't want to use the histogram to trade, anytime you see dark green bars, that's a sign of incredible strength. Here's yesterday's point of control. Here's the previous hours. As long as you're above the previous hours point of control and the previous day, you can look to buy pullbacks. One way of doing that is to just simply draw a trend line there. And in some cases, you get into a trade and it's kind of going sideways. You move your stop up. You would have lost 4 or 5 pips. Came down and found support here. Breaks the trend line. The bar goes green. And you can see it kind of went up to the upper band and went sideways. So I would have got out somewhere up here at 97. In the trade at 77. So you made 20 pips. You lost 3 or 4 pips and you made 20 pips. It pulls back down right to the previous hour's point of control and it can't break it. Now there are some kind of red bars in here. They're darker red than there are green. So you wait for it to break out over the high and it doesn't go your way immediately. You put your stop underneath the low here. It broke out, pulled back down a little bit, starts to go back up. You move your stop up. And you always want to draw your fibs off the previous swing so you have an idea of where your profit target is from this low to here. And again, the fib targets up here are an excellent place to get out of the trade. Notice how price tends to, when below the previous hour's point of control, this is where most activity happened during the previous hour, 1.2922 from 6 o'clock to 7. So when it was underneath there, notice it pulled back. It comes back up or underneath the previous hour's point of control, and of course it has a hard time going up that hour. When it finally breaks from here, this is not a bad trade. It didn't really pan out, but you can see it went up about 10 pips. You can use these point of controls to catch frequent scalp trades. And when it broke down right here, you might have went short. The market's kind of going sideways, so you put your stop over there. You lost 4 or 5 pips. Comes up to the point of control and can't get above it. Again, you go short, let's say at 2,900 or 28.99. Draw your fibs on the previous down move. Let's get rid of this previous one right here. From the high to here. And it didn't quite make it down to that fib level, and that's why we use trailing stops. Fib targets aren't always hit. Unfortunately, if you had sold either, let's just say 28.99, it pulls back down here, and here's your first lightly red bar. Stick with it until you see, the trend kind of falling, and then, when it goes 1 pip above that bar's high, you're out. So whether you sold it, let's say 99, you would have got out of this thing at 85, you still made 14 pips. That's really the key to trading is small losses, big wins. One of the reasons we spent a lot of time in the last month putting in point of control information is because, you just look at the chart. When it's above the point of control the previous hour, it tends to go up. Notice how it finds support, up. This hour right here was underneath it. It goes down, down. When it's below this, it tends to go down. When it's above it, it tends to go up. It doesn't just hit these levels. When it breaks through it, it tends to go a little bit more, giving you the chance to make a few pips, even a trade that doesn't pan out. Like if you went long right here at 98, it went all the way up to 11. So you had every opportunity to make, 5 to 10 pips on that trade, even though it didn't really continue. And when it comes up and finds resistance and it's going up without dark green bars, and the previous down move had dark red bars, guess what? It's not likely to break through here. And even if you got short at 2,900, it fell all the way down to 75. It fell 75 or 25 pips. And that's really, pretty important thing to look at. When you're underneath it, look for sells. When you're above it, look for buys. These kind of are lines in the sand, and most of the time they do act as support resistance. You can see support here. When resistance right here, it acted as there were some sell orders there. Once it busts through there, everybody who was short during the previous hours losing money, so they're going to rush in and buy. That pushes it up. And that's the real reason why the point of control of the previous day, the previous week, previous hour, previous 4 hours, even the previous 30 minutes is so useful, because it tells you where most traders during the previous period, whatever it is, remember, weekly, daily, 4 hours, hourly, 30 minutes, you can use them on 5 and 15 minutes as well if you want. I've pretty much not gone down smaller than 30 minutes because I'm trying to find bigger swings myself. The hourly ones will frequently find 10 to 20 pip moves. The 30-minute ones will find 5 to 15 pip moves. I haven't really wanted to overcomplicate my own trading by using even smaller time frame ones, but I'm in the process now of using this technology into our systems to try to improve, the buy and sell orders. I wouldn't have bought right here because it was so far above the point of control. During the next hour, it was underneath there, so we would have been looking for a sell here. We would not have had that buy here, and so forth. So underneath the point of control, the systems of the future will not be looking to buy because they're lower odds trades. And that's it for today's blog video.